What's up, guys? This is Tom, the Action Accountant. Today we're going to talk about Pfizer. I've been value investing for the last 15 years and I'm educating for half of that. And I'm excited to share my research with you. Let's hop in, shall we? Pfizer has been stuck in a rut ever since its December earnings, where they hit an all-time, or not an all-time high, an annual high of mid 40s and continued to collapse ever since. For the last last full month, they've been stuck between $35 and just under 34, hitting as low as 33.50. What's interesting about Pfizer over this period is the market has completely fallen out. However, they've actually continued to trade really well despite the rest of the market having some really bad dips. I'm taking that to be a really good sign and that it's consolidating and finding strong support. The reason why it's finding strong support is Pfizer has been a long-term dividend player, and despite spinning off a company last year, they do not appear to have any intention of decreasing the dividend that they've been paying all along the way. So, value investors or dividend investors are starting to scoop up Pfizer because you can get a 4.5% return on a pretty rock solid multi-billion-dollar company. In case you didn't know, there's a global pandemic going on that's about to turn 1 year old. Well, technically it's more than 1 year old, but in terms of lockdown mode, it's been about 1 year. That's where there should be a little graphic showing up. Pfizer had the details on the contract with the various government, and particularly the U.S. government, is that they are getting paid $30 per vaccine dose. And they are getting orders in the billions or globally. Now, of course, they're going to have a different contract with every single government, but that's a good way to help reflect what their earnings or what their revenue potential is going forward into this year. Now, Pfizer reports in the billions of dollars every single quarter, right? So they do about 10 billion per quarter. However, you're going to be talking about an additional 2 to 3 billion per quarter for each quarter going forward with the vaccine rollout. And if you can do the math, there's about 8 billion people in the world. Obviously, Pfizer's not going to get all of those sales, and obviously not every single person in the world is going to get vaccinated, but they're one of 3 major players, and they're one of 2 that are actively selling to cities and municipalities and governments around the world. Johnson & Johnson, of course, is coming online now, and they're going to take some of it. But it's not a crazy thing to say that over the coming 10 to 20 months or 12 to 24 months that they might be able to sell 1 billion vaccine doses in that period of time. So if you do 1 billion times 30, yes, that's $30 billion, which is more than they did. Well, that's not quite. That's almost a 70% increase from what they did last year. Just in coronavirus vaccine. That's crazy. And that makes me a little bit excited about what they can do going forward, especially with that cash. They're going to be able to deploy that in lots of different ways. At this point in time, from a technical point of view, while there is a strong sell warning because of this nasty 3-month chart, I think that you can start looking at this 1-month chart and start to see that, oh gee, the bleeding has stopped in the very low 33s. We're starting to see some recovery even in the midst of a weird week of market trading where the Nasdaq fell 7 or 8%. You're starting to see some rebound and recovery and strength in Pfizer, and you're going to start seeing value investors come in. So, ways to play it. You can buy and hold it and capture the dividend and let it ride its way back to what I suspect will be a 1-year high. So if I were to flash a graphic right now, I would say look for a price target in the $42 to $45 range. Bing. And I would look to buy it I would look to accumulate shares all the way up to $37. I'd be willing to buy it up until it's hit this little resistance. And the reason for that is once it gets above $37, it's going to find that as a new support point. So it'll start to be its kind of new low. So it's going to run its way up from 34 up to 37 very quickly over the next coming months, coming weeks potentially. That's 10% increase. Ching. And then it has the ability to run another 20% all the way up into the low 40s. Another way to trade that if you're feeling really a little bit more risky, is calls. And you can buy a call, and I would look to go several months out. So we'd be looking at April or June, and you'd want to look at that $37 point because that's going to be its new support. And you can buy those for $80 a contract. If you really like the price and feel that it really is recovering nicely, you can buy in the money contracts. So this $34, of course, you're going to pay a lot more, but you are reducing your risk a little bit because you're going to be able to purchase those shares kind of no matter where they line up. So your downside, while still infinite, right? You not infinite, still 100%. You still could lose it all if the price really tanks for whatever reason, but your upside potential, if it runs to 37 or to 40, is a lot higher with these 34s, because if it, let's just use $40 as an example. This is where I need like a whiteboard. This contract would be worth $6, $40 minus 34, plus some of the other Greeks, whereas this 80-cent contract might only be worth $3. So either way, you could be a little bit more than tripling your money. Then the exciting part with the 37s, of course, you need less capital to get in, $82 per contract instead of $189 per contract. It would have to go further for you to realize that return, right? So if it makes it to 37, these 34s are still going to be worth double or triple. If it only makes it to 37, these might not increase in value at all because the time value of money could erode the price over that same time period. So a little bit more risk on these 37s, but I like them. A little bit less risk on these 34s, but they cost a lot more upfront. I do think that we've found or are very close to finding a bottom on Pfizer, and I want to be clear, I do own Pfizer. However, I will admit happily that I did buy it at the top because I thought that we were going to see a run up with the announcement of the vaccine and its FDA approvals. However, I've been happily holding and accumulating as it's fallen because fundamentally I am a value investor and I'm excited about capturing a return. And I think that big picture, Pfizer is going to be in a much better financial position next year than it is currently. Not that it's in a bad position at all. I just think that they're going to be quote unquote blessed with an incredible run as they're able to operationally distribute and get these vaccines out around the world. I'm Tom the Action Accountant, and I want to remind you guys that this research is my own. I am a CPA in the state of Washington. I am allowed to give tax advice, but I cannot give financial advice. These opinions are my own. They're meant for education and entertainment only, and not financial advice. Look forward to talking to you next time. If you like the content, please hit subscribe or follow me on Twitter, or consider making a donation on my Patreon, where I can do an in-depth review of any stock that you want to talk about and send it off to you, and we can discuss that further. Have a great day. We'll talk to you next time.